Hello everyone and welcome into crushthestreet.com. We're going to get a good update today on the economy and what's going on with precious metals and maybe talk Trump a little bit. Trumponomics. Well, we'll see what our guest has to say about that. Louis Cammarosano, he is of smallgold.com, SMAULGLD.com. He's someone who studies the economy and really is preparing for what is to come. That's what it's all about, preparing for what is to come and positioning himself accordingly. So without any further ado, Louis, thanks for coming on Crush the Street with me today.
Well, thanks for having me on, Kenneth. How are you doing today?
Doing very well, and I just wanted to say that I really appreciate the work that you do. Very thoughtful analysis, creative and original content. So, you know, kudos to you, and I highly recommend people to check out your work. Let's start off here. The markets seem to be chaotic, schizophrenic maybe, although we're one day away from the longest bull market in history now as we do this interview here in equities. But, you know, the talks of trade war fears, markets go down. Trade war optimism, markets go up. And it seems like it's just news of the day that affects the equity markets. But what's your take currently on the stock market and where we're at currently?
Well, you mentioned news of the day, and I haven't been able really to detect what you used to be able to detect when you see certain news that you would just expect to be, oh, okay, well, that's a safe haven type of news. North Korea sent off a missile. That means gold goes higher. We haven't seen that correlation in the last 4 or 5 years. What we've seen in the macro, instead of looking at it day to day, is the stock markets are going higher no matter what. Interest rates are rising, stock market goes up anyway. So that's what I've been noticing the last 5 or 6 years, is that in general, the markets are going higher, and it doesn't matter whether you have good news or bad news. It's just any news in general seems to be pushing the U.S. equity markets higher. And I would have thought that at some point, lack of profits, declining, increasing interest rates, geopolitical concerns, worries about trade wars would somehow slow the equity growth, and it hasn't done so.
Absolutely. And I'm right there with you on that. But, you know, a couple years ago now, going on 2 years now, we had the election of Donald Trump. And I'm curious about your thoughts on this. Lots of optimism entering the sector by businesses and people with money and entrepreneurs wanting to start something. Lots of optimism, as opposed to maybe, you know, the previous president who may have excited people who didn't have as much money and, you know, maybe were looking for a subsidy or something from the government. Those were the kind of people that were excited during that presidency. And now we have real optimism in certain instances, lots of dollars coming back into the U.S. and inspiring investment. So this is, you know, changing the environment to a certain degree. I can't say that this is going to last forever, but it's definitely changed things. But I'd like to get your thoughts.
The United States, actually, if you think about the business environment, tax cuts are always good for, forget the politics about crumbs or for the wealthy or whoever they're for. In general, tax cuts have been shown to give the economy a shot in the arm, because the less money that's in the government sector, the more that's in the private sector. That means that even people who don't make a lot of money, still, if they get an extra $1,000 or $2,000, that goes into spending. The wealthy, if they get a big tax break, they're going to spend and or invest. And so when you have tax breaks, that does create a more vigorous economy. The tariffs, normally tariffs slow down trade. There's no two ways about it. In a totally free market economy, when you have tariffs, you're essentially shutting down trade on both ends. But these tariffs that Trump has put into place so far have kept they're protectionist in a way, And so, for example, you see the steel industry coming back. And then also the cutting of regulations has helped the economy. So that's probably, and then when you have the stronger dollar because you're raising interest rates, that also attracts capital into the United States. You have a slowing Chinese economy. So the United States, in a sense, is the place to be in terms of a safe haven currency being the dollar, and then also a place to do business and a place to invest money. And then when you have central banks also investing in stock markets, including the Swiss National Bank pushing up equity prices they have $100 billion in the U.S. stock market. They even own stocks like Tesla and unicorn stocks. So I think that's probably why you don't see equity markets drop significantly, because there seems to be a central bank put, either through the Fed or other central banks, who are either providing liquidity or creating the environment where low interest rates, no interest rates overseas force money into more speculative assets, and then actually direct investment by certain central banks like the Swiss National Bank. So that probably explains some of it. Plus, you have, as you say, some positive business and consumer confidence, which adds to the stock market. So it's not that unexplainable, but what's unexplainable is the valuation and the fact that the stock market has just gone straight up for the last 8 or 9 years. And I attribute that to going back to 1987, when the market crashed, when Greenspan was a green new Fed chairman, and he said the Fed stands ready, willing, and able to inject liquidity. And I think that's when the United States realized that their second most important asset after the dollar was the stock market. And they've managed to make sure that there have been no prolonged bear markets in the United States since 1987, including after the financial crisis, when stocks went tumbling down 2008. They were pretty much back within a year. So I think that there's a lot of, you can call it manipulation or intervention, pick your word, in the financial markets that keep the stock markets afloat. Because if you look at a company like Tesla, that type of company would not have couldn't even have gone public 25, 30 years ago. It was a kind of rule of thumb that you had to have a few years worth of profits behind you before you can attract capital. And now you can attract capital and you can keep stringing investors along with all types of fairy tales about what you're going to do. And yet we have companies like Tesla, and this isn't investment advice to short or to buy Tesla, but you have the concept of a company that has a $60+ billion market cap and has no profits, frankly, it has some issues with its design. There's been some of these high-profile accidents. And then you have a CEO who's not necessarily investor-friendly, storms out of investor conferences, discloses non-public material information when he tweeted out that he was going to take the company private and he actually listed a price higher than the current market price. So these are the types of things that you would say only in a bull market would this type of company get away with that and still have a very high market capitalization.
Yeah, there's something about Tesla that just the media loves. It's a media darling, and especially just with the clean air, pollution, global warming initiative, from a political point of view and from just a conventional wisdom, politically correct point of view, people seem to just be in love with Tesla and what they're doing despite fundamentals like you're talking about. So I think
what they've done, they fundamentally try to change the definition of value. And I think that's why that ties into why the gold price isn't rising. They're actually dictating, and by putting their own money where their mouths are, Silicon Valley, Wall Street, central banks, actually investing in companies like this, they're trying to say this company, despite historic ways of valuing companies, is actually worth $60 billion, and they've managed to keep it at that. They've managed to push the valuation of stocks like that up over the past 4 or 5 years and keep them up.
So in the topic of manipulation and just things trading the way they probably shouldn't be trading, and we do have gold. Now, the dollar has been the safe haven, as you've been discussing here, as we're alluding to. But that doesn't necessarily jive with gold being a good investment. In the sense that, we would expect higher gold prices in an environment where everyone's buying U.S. dollars. The dollar gets stronger, and usually the gold price reacts inversely to that. But I would also say that the Trump policies are not necessarily pro-strong dollar. He's made it clear that, he wants other countries to stop weakening their currencies and essentially allow the U.S. dollar to be weaker around the world so that, we can sell more stuff here in the U.S. So kind of a dichotomy of events happening here, but maybe you can help make a little more sense of the situation.
It's hard to make sense of it because the United States has been on a crusade ever since Nixon took the U.S. off the gold standard and shut down the convertibility of the dollar in 1971 into gold. They have been basically saying that the dollar is the dollar because it's the dollar, and it doesn't have to have any gold back. You had the petrodollar agreements supporting the dollar for a period of time, but essentially right now the dollar is the dollar because everyone uses it and everyone has it. And if you note, the Fed never talks about gold. Unless they're prompted by somebody like Ron Paul, who hasn't been in Congress for years now, when he used to badger Ben Bernanke about gold. So what they've done is they have removed further since 1971, trying to cut any tie from gold to money. Now, there are countries that do have gold reserves. The United States has gold reserves, they say, but they don't audit them. And I think it's not because they don't have them. I think it's because they don't want to highlight gold. They don't want anyone to think that the United States dollar is tied in any way, shape, or form as to whether the U.S. has or doesn't have gold. And then you have the European central banks, which own about half of the gold reserves of central banks. They're in arrangements basically to keep their gold. They have gold agreements, and they're about how much they can sell. And none of them have added any gold reserves other than China and Russia, Kazakhstan and Turkey. All the central banks, they may repatriate gold, but they don't add gold. And that's telling that because they're all in the fiat currency game, they really don't want to draw attention to gold. And since central banks don't seem to talk about it, don't add it, when they do QE, they never did. None of the central banks did gold. They print up a lot of euros, 5 trillion euros, 4 trillion US dollars, and they don't buy any gold with it. So they're clearly trying to demonetize gold or minimize it. And I think that has an impact on the psyche of people who buy gold because they don't necessarily view it as much as they used to as a monetary asset the way it was immediately after Nixon took the U.S. off the gold standard. During those days, Europe was hoping that the U.S. would go back to gold convertibility. People lined up to buy gold when you had inflation. You don't see that as much in the psyche of people, and I think that has a lot to do with it's been 45, 47 years since we've lost the gold standard. You've had generations of economists and people working in central bank that don't even have a real life experience with any sound money. They weren't old enough to even handle 90% silver coins. Many of them might have been born after or in the 60s when they didn't really understand what Nixon did when we went off the gold standard. So I think that has a lot to do with why gold doesn't respond the way it did even 10 years ago to geopolitical events.
Yeah, things seem to be changing. And it's something that I've heard other people say and I've witnessed myself is no cycle is ever alike. They're always different. There's always new variables. There's always changes that are happening. So, and with that, the analysis needs to be, adjusted accordingly, and we need to be nimble with our analysis. And that's what we try to do here at Crush the Street. So Lewis, one thing that I would say is that black swans are something that can impact the markets. And we even saw that just recently with Turkey and a pastor being locked up. I mean, this was not something that I think many of us were probably assuming would be highly detrimental to the lira. but the lira has been crashing and just major chaos going on with a pastor being locked up and then the sanctions that were imposed on the country. So, having said that, are there any sort of black swans or issues that you see potentially coming down the pipe that could derail the U.S. dollar or derail the stock market in a way that could be beneficial for gold?
Well, I can't come up with black swans because if I did, then they wouldn't be black swans. Black swans are generally things you can't predict.
Exactly.
But I think that too many people have been betting on the dollar collapse story. And the problem with that is, as much as countries like Turkey, like Russia, like Iran, really are not interested, or they feel that they are under the thumb of the dollar, part of that is there's not much they can do about it. So you see with Turkey, they have to issue their debt in dollars. Now that works when the dollar is relatively weak. They can scrounge up the lira to pay the debt. But when the dollar goes higher, they are absolutely hosed. There's nothing else they can do. And when the lira goes down, they can't even buy gold because that opportunity is already passed. That's the problem with, when you invest in gold, you have to have it before your currency collapses. You can't go out and get much of it when your currency is collapsed. So Turkey's between Iraq and a hard place, so to speak, in that they have a collapsing currency. They still owe the money in dollars, and they really have no way to pay for it other than perhaps they have to sell what remaining dollar assets they have, like treasuries, and they might even have to eventually sell gold. That's what happened to Venezuela. Venezuela used to have a very decent amount of gold. They repatriated it from the United States. They marched it around in the streets. And when the crisis hit and the Venezuelan bolivar, whatever currency they had at the time, fell 90 some odd percent, they had to sell gold to pay their foreign creditors. So I think it's an issue of wanting to be against the dollar, but because all of the countries are so tied into the dollar system that it's very hard for them to break away from it. And in fact, right now, the countries that are talking about de-dollarizing, their currencies are taking the biggest hit. Look at Russia. Russian ruble is down significantly, and they just added, I report on this every month, 25 tons of gold. They've got 2,000 tons of gold, but that's not enough to stop the decline in the value of the currency. Same with Turkey. Turkey's a top 10 gold holder. And that's because I think people don't realize what 2,000 tons actually means today. 2,000 tons is only worth $77 billion. That's not going to solve a $100, $200, $300 billion issue that you may have. And that has to do with that central banks really don't have enough gold, and therefore it has been minimized as a financial asset, because if they really wanted to protect themselves with gold, they'd have to have multiples of the amount that they have, or the price would have to be multiples higher.
So, Louis, I'd like to ask you about, and this is just, again, a fun prediction, just kind of your thoughts.
My favorite color is blue.
With the election of Donald J. Trump, he was someone who was not supposed to win. In fact, it was such a shock to conventional wisdom. Even the stock market and precious metals were going crazy the night of the election when it became clear that he was going to be the president. The markets were not pricing him in, and when it started to be realized, it went crazy when that news happened, because again, it was not priced in. It was a shock to the markets. Now, since then, there's been a lot of positive numbers. I know there's a lot of massaging and manipulation of the numbers, but even with that, the numbers are still good, and there's a lot of fundamental good that I believe is actually happening. But having said that, any thoughts or assumptions on what you think might happen in 2020 with his election? Do you think he's going to be able to be an 8-year president, or is it going to all end in 2020?
It's so hard to tell. I'm having difficulty with people saying what's going to happen in 2018, whether the Democrats are going to have this blue wave or the Republicans are going to ward them off. The issue with elections is the election issue of the time probably hasn't even been determined for 2020 or even 2018. People have short-term memories. it's whatever the issue is the last, I'd say 6 to 8 weeks, which has been on everyone's mind. And that can turn an election. So it's hard to know in 2020. But again, you could say day to day you can track, and then like with the stock market, there's a general trajectory. What I can say, though, is if voters generally do vote on economic issues, if the economy continues to churn along at 4% GDP growth, even if those numbers are massaged, they're still relative to others, as long as they're using the same methodology, then by 2020, you would think that a lot of that will have funneled into the economy. And even if the Democrats were to win in 2018, but the economy were to continue at the same pace, although that's not a given, then you would see Trump get reelected. Now, if it's not founded on the economy, and we saw today, they always have these things with the people around Trump. Michael Cohen pled guilty. He's going to jail. Who knows what he pled guilty to? It's just breaking news. But again, if it impacts the president and people start to perceive him as having done something wrong, like Nixon, then he's not going to get reelected. If they see him as the subject of a witch hunt, then he will get reelected. So it all depends on, basically, elections are won right around the margins. No one really wins 65-35. They generally win, 50-49.
Yeah, that's a powerful thing. Interesting insight there. Well, Louis, if people want to learn more about the work you do, the analysis that you do, please let them know about your site and what they'll find if they visit you there.
Well, thanks, Kenneth. I do a blog post now every day on smallgold.com, and generally it's either original work that I've written up and done charts around, or I do a daily or nightly, 7 days a week, 8 o'clock Eastern Standard Time on YouTube, a live stream on either the issues of that particular day or just general issues that we've been looking at in the gold, silver, and crypto markets. And you can also find me on Minds, Gab, Facebook, BitChute, Real Video, and whatever social media platforms out there that's pretty big, I'm on it.
All right, sir. Well, hey, thanks for coming on Crush the Street and sharing your insight and knowledge with us. It's all about expanding our minds and really just expanding the conversation, because I feel the more that people get educated, the better the future is for everyone around them. It's like iron sharpens iron, and that's what we're doing here. So appreciate your time here today.
Well, thank you very much, Kenneth, and thanks everyone for listening.